Hi and welcome to this week's Property Insider video. Today Dr. Andrew Wilson and I discuss the latest property market data, and the good news is our housing markets are going to finish the year on a high. We're also going to discuss how our housing markets and the banking system passed the ultimate stress test: a recession, the first one we've had in 3 decades, and high unemployment. If you'd like to keep up to date with all the latest property market data, why not subscribe to this YouTube channel and click the little bell icon so you can be notified each time we bring out our show. Australia's 7.1 trillion housing market has passed the ultimate stress test, our first recession in almost 3 decades, and it passed with flying colours. Earlier this year, many economists predicted house prices would tumble 10%, 20%, some even said 30% as they thought COVID-19 would sweep our nation. But now they're scrambling to reverse those forecasts. And now they're forecasting gains of 5%, even up to 15% in the next couple of years. And at the same time, the housing bears, they've been proven wrong time and time again. They're surprisingly quiet. Remember all those concerns about loan defaults and our banking system faltering because of the high exposure to residential mortgages? Well, that hasn't happened either. Not only did our property markets pass the stress test, but so did our banking system. Remember, during the difficult times, the Reserve Bank modelled what could happen if the economy contracted 20% or unemployment soared even to 20%. Of course, neither of these occurred, but the modelling showed that our banks could withstand these assaults and still maintain their minimum prudential capital requirements. In the fact, the RBA said during the year, the likelihood of major banks defaulting is very low. Now, sure, the RBA helped support the property markets by cutting interest rates to 0.1%, as well as buying those bonds and helping the banks in their lending programs. Of course, that lowered the cost of lending to borrowers, to businesses and consumers. And obviously, the federal and state governments have helped by throwing everything, including the kitchen sink, to support our economy and jobs. But they've learned from previous downturns. And while clearly there are still many economic hurdles to overcome, I remember in March, Prime Minister Scott Morrison told us he was building a bridge to get us across to the other side. And it seems like his bridge has withstood the ravages of the storm. And many of us, unfortunately not all of us, but many of us have made it safely across the other side. No doubt some segments of the property market are still having problems, particularly the inner city markets, but in general, our property markets are finishing 2020 on a high. So to get a better understanding of what's happening on the ground, I'm looking forward to my weekly chat with Dr. Andrew Wilson, Chief Economist of myhousingmarket.com.au. Hello, Andrew.
Good morning, Michael. I think that wonderful introduction that you just commented then, I think perhaps one of the real victims of what's occurred this year is the media. Maybe it's a little sobering for the media, and they only report those that are prepared to make these ridiculous assertions. But one of the problems is perhaps nobody's listening anymore, Michael. You know, that all the doom and gloom's just rolling off like water off a duck's back now, and people have just got on with business and just sort of gave a little bit of a smirk to those, once again, crazy predictions. And yeah, here we are again, prices are rising. And those, of course, that ignored the media and the predictions of doom and gloom up once again profiting with prices now higher. Those that didn't panic sell. That really just, as I said, took it all with a grain of salt. And maybe there are some lessons there, Michael, that you just can't keep crying wolf forever. Isn't that an old fairy tale?
Yes, there was a fairy tale about that, wasn't there? You get caught out in the end. This week, there are a number of news updates. I'd like to discuss those with you, including the extension to home builder. Yes. The government's announced sharp reduction in those claiming JobKeeper, the low number of mortgage holidays. Now people are paying back their mortgages and paying down their credit cards. Yes. And I know you've got some updates on the labour market, but let's start with your property market data update, please.
Well, thank you, Michael. Yes, and the week that was in our housing markets once again. And of course, we've only got 2 weekends left in our auction activity or our primary auction markets till the end of the year, and well-earned rest. And we're all looking forward to a much more normal Christmas break than we would have anticipated just a couple of months ago. So weekend auction market update, another strong weekend. Sydney finally moved over the 80% clearance rate mark. Michael, we sort of use that as the benchmark for a boom. We can perhaps use the big B word, the boom. Now with Sydney just trickled over 80%. It has been threatening for most of spring with high 70% results. Listings up again, quite a robust number of listings. We do see higher listings at the end of the season typically, but that didn't halt the high clearance rate, season high clearance rate for Sydney. Melbourne, again, a very solid result. It hasn't breached the 80% yet, unlikely to, I would suggest, but certainly a lot more listings into the market last weekend, more choice for buyers. But that didn't slow down the Melbourne market, 75.6%. We're looking to have quite a lift in Melbourne auction numbers over the final 2 weekends of the year. We'll discuss that in a second. But other capital city markets, very strong result for Brisbane. It's unusual to see Brisbane with a high 60% clearance rate. Numbers were down, but certainly a very strong result for Brisbane. Again, Adelaide and Canberra, good markets for sellers with the clearance rates well above 70% and over 80% in Adelaide. The trend for Sydney, as we can see, has been very steady with those high 70% clearance rate for most of spring. Top performers, again, the Northern Beaches in Sydney, top performing auction market at the weekend. Western Suburbs was also a top performer. And I think that reflects particularly first home buyer activity in what is one of the more affordable regions of Sydney, the Western Suburbs. Central Coast had a higher clearance rate, but just 4 sales. So a little bit of a volatile outcome there with only 4 results listed. Top price reported in Sydney, auction sale reported in Sydney on Saturday was a property in Kenthurst, outer suburban area, regional area in Sydney, semi-regional area in Sydney, or semi-rural area in Sydney, 7.2 million there. Melbourne's clearance rate trends, wow, look at that roller coaster, and then up and away, and certainly holding its own. Very solid results in Melbourne despite higher listings coming through. A lot of catch-up energy in Melbourne, which will continue to be released after the pause for the holiday break in January, and we should see that market continuing on quite strongly. The Western Suburbs, similar to Sydney, was the top result in Melbourne in terms of regional auction activity. Top sale in Melbourne on the weekend reported was 7 Neave Street, Surrey Hills, just over 4 million there. Surrey Hills has actually reported a number of sales in the top 10 over the last month or so in Melbourne. Listings in Melbourne, well, we're recording a surge in listing numbers in Melbourne over the final 2 weekends. I'm not sure we'll get those sort of numbers. We're actually tracking around 15% withdrawals from listed auctions in Melbourne every weekend, Michael. We've discussed that being perhaps that online auction marketing technique now that's popular, which means there's a little less jeopardy involved if you do withdraw your property on auction day. So I would expect those numbers to be lower, but certainly on the rise, and that shows sellers are wanting to get a part of the action before the season shuts down in a fortnight. So that's the auction market. New listings, yes, we're now starting to see, this is the daily new listings index, which tracks new listings nationally coming into the market over the past week on a day-by-day basis. We can see a sharp decline now over the past fortnight. No surprise, of course, because sellers are winding down in terms of their market activity. And this, of course, is the normal seasonal easing of seller activity, new seller activity through the end of November and into December. However, if we look at the comparison with the same time last year to get rid of the seasonality, we can see that we're still tracking higher than the same time last year for new listings. Getting a little closer now, but I think that is part of the reason we are higher compared to last year is the rebound in the Melbourne market, where we're certainly seeing a pickup in listings at a higher level than a year ago because of the, the pent-up demand from the shutdown in Melbourne during August and September. Over the last week, again, except for Melbourne, new listings were down in every capital city market, reflecting that wind down, Sydney the most. And if we can see the comparison there as a result of that falling in all capitals except for Melbourne, Melbourne's now tracking around 40% higher, or has tracked 40% higher new listings last week compared to Sydney at that 100. Total listings, no sign there of any movement in total listings. There were predictions that we were going to see a surge in total listings. This is the total number of properties advertised for sale currently, listed for sale currently. Only Sydney was down, and that, of course, is part of that seasonal decline, what was revealed in the previous slides, but everywhere else pretty steady. Melbourne up a little bit, again reflecting that increase in new listings over the past week. So that's total listings, and Melbourne now's total listings are around 20% higher than Sydney at the moment. So that's the listing side of the equation. Our sellers, let's have a look at our buyers now. And of course, the buying activity is continuing. And then when we look at Sydney, we've seen quite a steady, an increase over the past week. And that's certainly been a consolidated performance by buyers in Sydney over the past month, and still just below where the market buying peak was just before coronavirus shut down at the end of February. Melbourne similarly had bounced back, strong number. It's solidly below where it was before the coronavirus shutdown, but it's certainly grown very strongly since the shutdown conditions eased in October. And as I mentioned before, I think there's still plenty of pent-up demand there from buyers, which will be released next year once the holiday season concludes. Brisbane has been the strongest market for buying activity, and it's well ahead of where it was at the beginning of the year. But as we say every week, Brisbane is a second half of the year market, and it's certainly proving that with a massive increase in sales over the past week, newly reported sales. And you can see that they're up nearly 30% compared to the previous week. But all capital cities are reporting higher levels of sales on a week-by-week basis, and Brisbane particularly strong. Last week, Sydney's still the strongest market for sales, actual sales numbers tracking around about 10% higher than Melbourne, but those relationships are reasonably steady at the moment. Of course, with that Brisbane surge, it's got closer to the Sydney numbers, but still nearly 50% fewer new sales, or more than 50% fewer new sales in Brisbane compared to Sydney. So that's the state of the market, onwards and upwards. Strong finish to the year continuing. Let's have a look at the economy. Well, we'd always look at the share market, Michael. It's been particularly strong over the last week, just eased in recent days. Surprisingly, of course, just when predictions were that it was going to catch up with its pre-coronavirus levels, it took a little bit of a beating, and perhaps that was profit-taking on the rumour of a surge over the final weeks. And we still might get there, but it's been a remarkable recovery in the stock market, and it really has continued to rise since that cut in interest rates was announced, and still below where we were pre-coronavirus, but no doubt a very strong endorsement from investors on the state of the Australian economy. As the nature of the Australian dollar, Reserve Bank just can't get that Australian dollar down, which was part of the plan. It's well ahead of its pre-coronavirus levels. A little bit of weakness in the US dollar has perhaps contributed to that, as well as strength in the US stock market contributing to the Australian stock market performance. We must mention that, but certainly the Australian dollar is very strong compared to where it's been over the last year or so. We did look at the latest unemployment rates last week, Michael, of course, and we looked at the state-by-state comparisons. The latest data we have out released last week by the ABS looks at the capital city markets. Of course, they're very similar to what we reported on the state basis, but it's interesting to look at the comparisons there on a capital city comparison. Sydney, the lowest unemployment rate, and this is not seasonally adjusted, this is original data. So it's sort of comparing like with like on that capital city basis, which it does with seasonal data anyway. But Sydney just below Adelaide at 6.6%. Of course, well below Melbourne, which is obviously still in recovery mode. And Brisbane be a little disappointed, still having the highest unemployment rate there, and maybe some question marks over the lengthy border closures in Queensland. But certainly Sydney and Adelaide are the best performers there for unemployment. If we look at the nature of the actual jobs market since shutdown in March, Michael, we can see that the number of jobs, or the number of employed, is now getting very close in most capital city markets to where it was pre-coronavirus. So just 1.4% fewer number of employed in Sydney compared to March, and similar close comparisons with other capitals. Exception, of course, is Melbourne. No surprise there that it's still 5.8% lower. The number of employed is 5.8% lower than where it was in March pre-coronavirus. But I think those numbers are remarkable for the other capital cities. We're just about back to where we were. And, this is October numbers. So we've still got 2 months of employment data to come, plenty of confidence in the market. And we always get higher levels of people employed during the Christmas holiday period, the shopping period prior to Christmas. We look at the participation rate compared to where it was in March. So these are the March participation rates. And we can see participation. So that's the proportion of those in the workforce as a percentage of the population, the workforce as a percentage of the population. That includes those not just in jobs, but actively looking for jobs. And we can see that Sydney's almost back to where it was. Most of the capitals are almost back to where they were. This is quite an extraordinary result that basically we haven't seen any. We're going to get to the end of the year and likely seeing a better result from our employment markets than we had prior to the coronavirus. Melbourne, of course, is the exception. We've mentioned there's plenty of legs left and upside left to Melbourne's economy, just as we discussed in regard to its housing market. So that's it, Michael. Some more interesting news going forward, and certainly the consolidation of an improving economy and housing market has got the bears all headed back to their caves.
Well, as you said, Andrew, a couple of bits of extraordinary data there. It looks like we've virtually eliminated coronavirus in Australia, other than those people in the hotel quarantines. Our job numbers have rebounded quickly, as you said, other than Melbourne, but that's going to pick up as well. But let's quickly discuss a couple of other bits of news that have happened recently. There was the concern about all those people taking mortgage holidays. They weren't really holidays. All that was happening was you delayed your payment, but you had to pay interest still, and in fact, you're paying interest on the interest. But the numbers coming through from the banks are very good, aren't they, Andrew?
Yeah, they are, Michael. And I guess it adds to what we've just discussed in terms of the economic environment. So we shouldn't be surprised. But yeah, the latest data from the federal government, there will be some updates this week on the government's financial position. But it's announced that its budget for JobKeeper is significantly lower than expected. So the predictions of the cliff, that's something else that's going to pass into history very soon, if not already, because that's the acknowledgement that not only is the level of support lower than predicted, but the uptake is lower also than predicted going forward. So there will be no repercussions on all the current data, which is improving week by week from the easing of the JobKeeper restrictions, of the JobKeeper allowances. And Michael, we've been saying this for months, really. But again, it's just been a scare campaign. And we saw the same thing, as you mentioned, with the mortgage holidays. The banks have been offering the pause in repayments for some mortgagees. Commonwealth Bank has announced that its numbers are very low now. People are coming off that quite quickly. And again, it's just another sign of a reviving economy. So no cliff for JobKeeper, no cliff for when those mortgage holidays finish. Not just a reviving economy, but a sparkling economy in prospect. I don't know, is it good luck or good management, or is Australia really and truly now proven to the world that it is the lucky country? End of story.
Interestingly, some people have got a lot more money in their bank accounts than they started with at the beginning of the year. There's no doubt that a number of people have been harmed by the recession that we've had, the loss of jobs, but 90% of people have still got their jobs and they've got more money stashed in their bank accounts and paid off their credit cards. So they're going to go into 2021 in a very good financial position.
And it's all relative, Michael, as we know that this has been a recession and it has ended. Officially, that'll be announced in a few weeks. And there has been a lot of stress with too many people as a result of the coronavirus restrictions. So we're not certainly trivialising that, but the data is the data. But all we have to do, Michael, to elevate Australia's position is just to compare ourselves with similar economies overseas. It is an horrific environment in the US in regard to coronavirus. It's as bad as it's been and it's getting worse. And of course, the UK is similar. And the UK's economy really is in deep, deep trouble as a result of that. It's almost as though we are in a solar system all by ourselves at the moment, and we really should rejoice at that. However, we need to acknowledge that people have and are continuing to do it tough, but gee whiz, you'd rather be here surely than anywhere else on the planet. And that's why people are queuing up to come back home.
Wait till they open the borders. That's right, Andrew. There was also the announcement of the extension of the home builder program.
Yeah, which I think we discussed that might have been a possibility, Michael. It's been very successful. I wasn't surprised. I mean, I'd been really pushing for it to be extended. Of course, it's extended till March, and the actual quantity of the deposit policy is down to 15,000 from 25,000. But look, that's been a successful policy. Just shows there's plenty of pent-up demand still for housing in this country.
And we know that the government recognises that when first home buyers buy a home, they've got to buy carpets and refrigerators and television. And so there's lots of tentacles from the octopus going out all over the place greasing the wheels of industry.
And they feel a lot better about themselves too, Michael.
That's important. That's important. So I'm happy to hear this good news. I look forward to catching up with you once a week. And it's nice to report good things happening in the market.
Well, it is, Michael, of course. And again, it just validates the robust and resilient nature, not just of our housing markets, but of our economy. And it's something we should rejoice and embrace. And you can only cry wolf so many times, Michael.
Sometimes you don't realize how good you've got it till things go wrong. Thanks for your time, Andrew.
Thank you, Michael.